The Australian property markets are in a slump at the moment, and the media keeps feeding us stories and headlines of doom and gloom. Is the media creating the property slump, or is it just reporting it? Well, I've got my view, and Dr. Andrew Wilson's got a slightly different view, but that's one of the topics we're going to discuss in this week's Property Insider chat that I have regularly with Andrew Wilson. We do these regularly as a video, and today there's the audio track of one of our recent videos that I think you're going to enjoy as you understand a bit more about what's happening in the background in the media and our property markets. But before we get into that, I'm going to share with you in my mindset session 5 mistakes that a lot of people make to stop them getting financially free. And while it is about the money, it's more about the money habits that many people have, you may have, or you're going to know somebody who has them, that stops them becoming financially successful. 2 great topics to discuss with you, so welcome to this week's episode of the Michael Yardney podcast.
Welcome to the Michael Yardney podcast, where each week you will learn a number of new ideas regarding success, property investment and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property advice. Now here's your host, Michael Yardney, Australia's most trusted property commentator, who has once again been voted our leading expert in wealth creation. That's the 5th time he's won a similar award in the last 7 years.
I'd like to spend a couple of minutes speaking to you about the top 5 financial mistakes I see many people making. Maybe you're making some of these too. Because you see, becoming financially free is about your habits. It's not about getting lucky at the casino one night or a spectacular financial investment that happened to go your way or just buying at the beginning of a property boom and making money. It's about making good decisions day in, day out and continuing to make those decisions over a long period of time until they become a habit. Once you commit to becoming financially free and wealthy, you see it as a lifelong way of behaving and thinking, rather than something you just managed to pull off. This means following a few rules on what we allow ourselves to think and what we allow ourselves to dwell upon. Now, these can differ from person to person, depending upon what your strengths are, what your weaknesses are, but each of us should be guided by a few ideas on how we stay on track. Now, on this list, there probably should be things you do every day, like doing exercise, like learning something new, but there should also be things on the list that you don't do. So what could these be? Well, the ones I want to talk to you about today are ones to do with mindset. There are a handful of mindsets that people adopt that take up a lot of their time and energy and keep them from achieving their dreams. It holds them back because it stops people from getting wealthy. So if you can avoid adopting any of the following 5 mindsets I'm just about to share with you, they're common, by the way, too. You're already going to be ahead of the game. So the first one I want you to avoid is relying on a wage to get you wealthy. If you're like most people, you were taught by your parents to get a good education, get a good job, buy a house, pay it off, get a good salary. Now, don't get me wrong, a wage, a salary, it's important. You need cash flow. It provides the roof over your head, it gives you food on the table. So I'm not dismissing that, but you won't get ahead. You won't truly get ahead by working for somebody else. Now, I've often said that unless your money is making money for you while you're asleep, unless your investments are your businesses, you're never going to become wealthy. So you look at it in all areas too. The tech innovators, they work for themselves. Now, it doesn't necessarily mean you've got to become an entrepreneur. Of course, you can still work for somebody while building a property investment business on the side. That's what a lot of Australians do, and you keep doing it until you can afford to toss in the 9 to 5. One thing's for certain, you need to drop the wage mindset and think like a business person, think like an entrepreneur. The second mindset you have to give up is thinking investing is too hard. Look, nothing in life comes easy, and you don't need to have worked in the financial property industry for 40 years to make good investments. What you need to do is get good advisors. You need to get a good team around you, and you can stand on their shoulders and you can go much further. You need to work hard. You've got to be resilient. You've got to be focused. But don't be fooled when people tell you that it's just too hard to invest. That's simply a cop-out. It's what others are telling themselves because they haven't got the courage to do it. You see, everything that's easy today was once hard. In fact, I remember the first investment book I bought many years ago, it would have been close to 40 years ago, was called The Courage to Be Rich. I didn't understand it. I knew I wanted it. I couldn't understand why people needed courage. So, mindset number two, you've got to avoid is thinking investing is too hard. Mindset number 3 to avoid is thinking that it's money that's causing your problems. Now, that's a big one for many people. They've had some setbacks. They walk away from investing altogether and they decide, look, all this money stuff, it's not for me, this investing stuff. It's not for me. What they don't understand, that money is for them. It's for everybody. And it's just what money represents to them that's the problem. Their own failure, things that haven't actually worked. But failure is a good thing, and money shouldn't be feared, shouldn't intimidate you. It's merely a means to an end, which is having a financially free life to choose to do what you want to do. And there's nothing wrong with chasing that. Now, you've heard me speak about it often before. True wealth isn't just about how many properties you've got or how much money you've got, but there's no doubt that having money helps get rid of a lot of your troubles. I'd much rather drive up to my problems in a Mercedes than in a Hyundai. Having said that, any problem that money can solve isn't really a problem anyway, is it? Okay, mindset number 3 you've got to get rid of. Thinking you don't deserve it. Now, this is something I see so often. People will never tell it to you outright. They won't say that they don't think they deserve to make money. But they'll show you they think this in many other ways. They're going to be self-sabotaging by blowing their money, by not committing to saving, by not chasing their dreams. They don't prioritise wealth because they think, deep down, they think it's never going to happen to them. They think like a poor person who's always going to remain poor rather than the person who's on their way to achieving wealth. Half the battle in becoming rich is giving yourself permission to be wealthy. Mindset number 5 that you have to get rid of is being afraid of making a mistake. Now, this is a big one for many people. Mistakes aren't bad things. Never. And yet we fear them. We fear making them. It's debilitating for many people. They're so afraid of messing up that they'd rather not even try. How sad is that? After all, this isn't a dress rehearsal and we've only got one chance in life to do what we really want to do. And it's just the way it is. Mistakes are a part of life. And the more you aim for, the more mistakes you're going to make. But the only true failure in life, I guess, is never letting yourself make a mistake. So don't compare your success or failure to anyone else's. Don't compare your chapter 1 to somebody else's chapter 12. Can you see how damaging that sort of mindset could be? Yet these mindsets I'm just discussing with you, the 5 mindsets I just shared with you, they're very common. So ask yourself, have you ever fallen into one of the above mindsets? I bet it's held you back. But the good news is there's always time to change them. Money doesn't discriminate, it doesn't care who owns it, so why not have your share? In a moment, I'm going to have a chat with Dr. Andrew Wilson about the media and is it actually creating this slump or just reporting it? But before I do, I'd like to just spend a moment reminding you that once a year in June, I get together with about 50 successful business people, entrepreneurs and investors at Australia's highest end entrepreneurial workshop that I call Wealth Retreat. It's not really a workshop, it's not really a seminar, because for 5 days you actually get together, live with the best faculty I could put together, and get all your personal questions answered. And you're not only going to learn from the faculty, but from all the other people around. You see, you can only get that much from the internet. You can only get that much from books or resources or podcasts. But if you immerse yourself with a group of people that you can learn from, joint venture with, share experiences, you're going to come out a very, very different person. So go to wealthretreat.com.au and find out about our faculty of speakers, who include Dr. Andrew Wilson and Tom Corley and Ken Race and a heap of property experts and finance experts. Don't count yourself out. I only do this once a year, and this is a watershed year. Things are going to change. The government may change. the taxes will change, the property market's changing, and if you're in business, you really, really have to come, because Mark Creedon, my business coach and my partner in Business Accelerator Mastermind, is going to be there to help take your business to the next level. So go to wealthretreat.com.au, find out all about it, register your interest, then you and I can have a chat to see if it's going to be worthwhile for you, because I'd love to spend 5 days with you if it's going to be right for you, and if it's not, I'm definitely going to tell you. We're currently in a market downturn, and the media keeps reporting that. But in some ways, I wonder whether the media is causing the market downturn. How can one be confident when every day you open your emails, you read the papers, you look on your iPad, and you hear negative headlines? They're telling us doom and gloom, property Armageddon. So I think the media is creating consumer sentiment rather than reporting it. But I was having a chat with my good friend, Dr. Andrew Wilson, Chief Economist of My Housing Market, and he's not really sure that's the case. Welcome, Andrew.
Thank you, Michael.
Well, is the media creating our market sentiment, or is it just reporting it?
Well, it's certainly, there's room for blame at a number of levels, and there's no doubt that the role of the media is to generate interest, clicks, views on pages, all those bits and pieces. And we're all very attached to our housing markets, our house prices as investors or owner-occupiers. So, and obviously we are concerned when we read stories about falling prices and, a declining housing market. So that, of course, garners interest. So you can't blame the media for wanting to report what people are interested in. I guess there is a sense of some responsibility from the media to perhaps vet those that make particular commentary, and I think they do by and large.
I agree, Andrew. If you say the property market's having a slowdown, you'll get retweeted. If you say it's going to drop 10%, you're going to get in the blogs. But if you say it's going to drop 40%, you're going to get on TV, you're going to get on Current Affair, you're going to get on 60 Minutes, and then people seem to believe it's true. On the one hand, you do say the media does vet the people whose commentary they give, but they seem to be very selective with which bits of the commentary they take.
Well, that's right, Michael. And look, they understand, of course, that their job is to get as many viewers as they possibly can. Now, there are various levels of the media, of course. There are those that are called, tabloid journalism, and they tend to perhaps not be as rigorous in terms of vetting their storylines. And then there's, the so-called quality media that maybe are a bit more circumspect about their headlines and their storylines. But look, it's a whole new world for the media now. It's very tough. Digital transformation has meant that big media, is largely starting to disappear. People are going to single sources now for information rather than sources which have a multitude of storylines. And that makes it even more difficult for that big media. But unfortunately, Michael, these things tend to exacerbate themselves. They add fuel to the fire. They create buyer and seller wariness, which means the market becomes sidelined, and we only have perhaps a higher proportion of market activity from non-discretionary sellers, which only puts more downward pressure on prices.
Well, interestingly, last year our property markets were chugging along not very well, and then all of a sudden 60 Minutes came out with a story. Now, I haven't watched 60 Minutes for years, but even I couldn't help myself. So I watched and I heard a number of experts, so-called experts, experts chasing a headline, to be honest, telling us how our property markets were going to crash 40%. And even the Perma-Bear Martin North gave 4 scenarios. But interestingly, 60 Minutes only mentioned his worst case scenario as if it was the only scenario. And that's why I say the media needs to be held accountable too, because all of a sudden sentiment changed after that, didn't it?
Well, it did, Michael. And I'm always amused at people who regard themselves as experts and have about 50 scenarios in terms of their predictions. So if you have enough scenarios, how can you possibly be wrong? And if you give a number of scenarios, then why should you complain if the media takes the one that's the most interesting? Talking about that potential 40% fall in the market this year in Sydney. Sydney prices are down around about 3% over the first quarter this year. So that means we can look forward to a 37% fall in the median house price over the next 9 months, according to those predictions, which of course is complete and utter nonsense, given that, we're going to see certainly not higher rates, maybe lower rates, and the market's starting to look a little bit more confident. As you said, that when that 60 Minutes show, my phone rang off the hook, if I can say that, I don't think phones ring off the hook anymore, after the show. And it was one thing for all those that were so-called misquoted to complain and whine about that, but you don't say something you can't substantiate. And the public picked it up, and really the housing market fell over as sharply as I've ever seen it over the final couple of months of last year, fueled by serious concern over the trajectory of our housing markets.
Now, I'm very careful with which media I get into, because I know they spend quite a lot of time speaking to you and then take one or two sentences. But I know that 60 Minutes actually contacted you about that show. What happened?
Well, I get a brief. I do a lot of work with Channel 9 and, and the other channels as well. And I had the reporter rang me for a briefing. She said that it was Tom Steinford, just said that they were doing their annual show. Did I have anything, to brief him with? And I said, well, I just think the future of the market was a lot flatter going forward, basically because interest rates really weren't going anywhere, much up and certainly not much down and certainly not up. So I think, and I said to him, I thought the price cycle would be a lot flatter. But I said that any negative aspects to that was the fact that we can't rely on that sort of capital growth windfall that homeowners have benefited from over the past 2 or 3 or more decades, to grow their savings. And so I think that was a negative in terms of current generational wealth growth. But I think the media does have a responsibility to hold accountable those that make these predictions. As you know, Michael, there's been a few that have got it wrong.
There's a long history of people who've got it wrong, who've got big publicity. Way back in 2008, during the global financial crisis, Professor Stephen Keen said our property markets were going to crash 40%, and they only dropped 5%. And then in about 2011 again, he changed his predictions and said it was only going to drop 10%. After the first one, I remember he had to wear a T-shirt and go, I think it was 200 kilometres from from Canberra to Mount Kosciuszko, saying, I got it terribly wrong about the property markets, ask me how. At least he actually had the guts to do that. Then in 2011, he changed his prediction. It's only going to drop, I think it was about 10 or 11%, but in fact, the property market boomed after that. And then he went to America. Harry Dent, he's been back year after year, and I heard he's coming back again to Australia now. And every time he does, he sells lots and lots of books. No one's holding them accountable, Andrew.
Well, no, and it doesn't seem to hurt their careers either, Michael. That's the fascinating aspect. And I think, that's the point, that you gather so much attention from your doomsaying that, it can provide you with a career path and, profitable outcomes. And I guess you can't tell people not to be stupid. It's up to people to, follow or not follow those that make these types of predictions. And that's, the wonderful free society we live in. I think that the environment for the doomsayers is going to be less fertile in the future, Michael, because of the fact that we're going to have a much flatter property cycle. So we won't have the opportunity to come off a strong boom, start talking about bubbles and, house prices falling by, record levels, because the market will be much flatter going forward. So I guess those doomsayers will have to find another topic to scare the bejesus out of people.
Well, the problem today with Google and other search engines is it helps what we call confirmation bias. So as humans, we like to look for information that confirms the decision we've already made. It's much easier to put another picture into the puzzle, another piece into the puzzle, the picture in our mind, rather than start with a whole new picture. And once you start doing a search on property bubbles or property Armageddon, Google keeps sending you down a rabbit warren looking for more and more of those things. So there seem to be two groups of commentators out there, the perma bears, and we've gone through a number of those at the moment. The people are always bearish, and some people who seem to be always bullish. Some people say, I'm always bullish about property, but that's actually not true. I'm bullish about certain parts of property, but definitely I am concerned about large segments of the property market, which in general are not going to do very well in the next couple of years. There's 10 million properties for sale around Australia at the moment. of not 10 million for sale, but there are 10 million properties in Australia, and most of them don't make what I call investment grade properties. You've got to be in the capital cities, you've got to be in the right suburbs in the capital cities, those locations where people's incomes are going up and disposable income is higher, where owner-occupiers want to live near transport, near amenities. And even in those locations, only certain properties are going to be what I call investment grade. So I'm not a perma bull. I believe I'm realistic. But Andrew, I've heard people say that you're permanently positive, that you're always positive for the property market. How would you respond to that?
Well, that's nonsense, Michael. I'm, 20-year classically trained academic in research. I have a PhD, a Master's by Research. I worked as a, professional senior research fellow on CRC, ARC projects. I don't have any inbuilt particular bias or ideologies. When you mention the word perma bear, it's rather amusing. I mean, it's just an ideological, bent. Someone calls them a perma bear. I'm a rationalist, not a pessimist or an optimist. Everything I say is backed up by, as I've been trained to do, solid factors of research. And, it's actually been good for me because I'm in an environment where there are a lot of perma bears and perma bulls. Perma bulls are always trying to, sell something. Perma bears are just trying to sell the doom and gloom, and they get their own sort of financial return. But everybody who's got an opinion on the market that seems to be one way or the other, just ask them why. Ask them to justify it. Ask them to rationalise it. That's what I always do. That's what I've been trained to do, is to take an objective and a rational approach to housing. And
well, unfortunately, I believe we've got 25 million property experts in Australia. Everyone seems to have an opinion. So when people speak to you on the weekends or on the barbecue and tell you that the property market's going to boom or the property market's going to crash, you're 100% right, Andrew. I think a really good question is to ask why. What experience have you got? And I think one of the reasons I love having these chats with you is you don't have anything to sell. You don't have a hidden agenda there. You don't have books to sell or products to sell. And on that basis, you can be a realist. So you were trained in that. And I think you still are that way. So I really have fun with these chats. So the bottom line from what we started, is the media creating the property downturn? Is it just reporting it? Probably a little bit of both, Andrew.
Absolutely. And the whole point is be informed. Don't believe everything you hear. Don't believe everything you see. And look, I guess, to the motivation of those that are saying, either too bad or too good. Maybe at the end of the year we can be asking, well, why did you get it wrong? But the answer to that is, well, I had 40 different scenarios. So I got it right, actually. It's just that the other 39 were wrong.
Either that or, well, I got my timing wrong. It is actually going to happen, but not this year. It's going to happen next year. I think the underlying factor is that the downturns are temporary, while the upturn of the increase in value of well-located homes, A-grade homes and investment-grade properties is permanent. Changes of government are temporary. Changes in tax laws, legislation come and go, but it's the underlying factors of strong population growth, particularly household formation, I guess, more than population growth, and the wealth of our nation, the fact that we can afford to live in good locations. And we all want to live in those lovely locations near the seaboard, in the better suburbs of our capital cities. That's what's going to push the long-term value of our property values up. Andrew, as always, it's fun having these weekly Property Insider chats. I look forward to catching up with you again next week.
Thank you, Michael.
Well, I always enjoy my chats with Andrew Wilson, and it gives you a chance to get into the head of Property Insiders. We do a weekly video series, Property Insiders, where you can watch Andrew and me. Go to propertyupdate.com.au, subscribe to my daily newsletter, and you'll find out when the next episode comes out. And we run some of those here on the Michael Yardney podcast. Because of many requests, I'm now doing this podcast every Tuesday and Thursday, so I hope you're getting benefit from it. If you do, tell somebody about it. Help pass the message on so we together can make more Australians financially fluent. And thank you all for the many, many people who are leaving 5-star reviews. And I got a great one from Ching Chang 112 recently, who said, I've been looking around for money and success podcasts, and I've hit the jackpot. Very knowledgeable and lots of interesting topics are discussed in detail. I really enjoyed the 13 Success Habits of the Rich. It's a great episode. Thank you, Michael. Well, thank you, Ching Chang. And anyone who leaves a review, if I read it out, I'm happy to gift you one of my books. So if you hear your review, just email me at michael@metropole.com.au and I'll send you a copy of one of my books. Just tell me which one. Again, thanks for spending the time with me today, and I look forward to catching up with you again real soon.
Thanks for listening to this week's episode of the Michael Yardney podcast, which was brought to you by Metropole, who help their clients grow, protect and pass on their wealth through strategic property advice. If you got value from today's show, we'd really appreciate it if you would leave a review and we'll read it out on a future show, and Michael will gift you one of his books as a way of saying thank you. Just go to michaelyardneypodcast.com/review and let us know what you think. If you don't already subscribe, head over to iTunes or your favourite Android app. You'll find us there as Michael Yardney Podcast. If you'd like to gain instant access to the show notes, head across to michaelyardneypodcast.com. Watch out for our show next week. You'll learn some new ideas about property investment, success and money in around 30 minutes.